Hey everyone, welcome back to Grumpy Monkey Technical Trading. My name is Michael. On the program today, we're going to be taking a little bit of a break from the market. It's been going a little hot and heavy for me, a little too up, a little too down. So we're going to wait it out for a bit. What I wanted to do is take a look at some stock chart patterns. In particular, I wanted to look at the cup and handle pattern, give you a little explanation as to what it is and what to look out for. And then I found some candidates that we can actually look at the stock charts and see how it fleshes out based on our criteria. So stay tuned. All right, so before we jump right into stock charts, let's take a look at the theoretical pattern. The cup and handle pattern is generally recognized as one of the more stable patterns, and that's because I think it comes from a really psychological basis point from a trader's perspective. You can really get into the head, I think, of a trader with the cup and handle pattern. So what do I mean? If we look at this graphic, we can see like a very long running uptrend, which has to reverse at some point. Nothing can go on forever. So people start to sell, they start taking profit, and the stock starts to dip, right? And then it'll peter out with lower and lower volume in the base of the cup. And then people realize like, hey, this is a good stock that's just taken like a 20 or 30% haircut. I really like its opportunity, so I'm going to start to invest in it again. And the volume starts to pick up, right? So you start forming the upside of the cup, which is really interesting. But then we get to this point, and we look back at all the traders that bought here at the end of the first peak, right? They've just endured 4 or 5 months of just like, oh, I just want to get rid of this stock. I can't believe I bought this stock. Everyone told me but it was a winner, and then now look what it's done. And they're getting to this point and they're like, I can just get out. I can get out at break even. I'm totally taking that deal. So they start to sell, which negates the uptrend which was been formed by the candle, which starts to form the handle, right? More people are selling because they're just trying to get out. You also have people that were selling that maybe bought at the base of the cup, right? They've just gotten a 20 or 30% gain, which is a solid gain. So they're selling. So this uptrend that was previously defined and continued from the original uptrend is now being negated because people are profit taking, and those original people are saying, I'm done, I'm out. So that's where that cup and handle pattern comes from. So what we get is a few simple rules for looking for cup and handle patterns, right? You want more of a U rather than a sharp V. The reason for that is that sort of indicates that it was a natural progression of just selling off of highs from that original thing, that people are profit taking. It wasn't initiated by a sudden spark or a sudden gap down or something like that. You want to look for the slowing of volume down in the base where people's selling is starting to peter out. You want to see that overall there's probably a 20-30% drop. You don't want to see like a 50% drop. And then when you get to the top, you want to see like a 5% candle. Then for entry points, you can take sort of the more riskier entry point, which is the first, if it was to break the top trend of the handle. Or you could look at the other trend line, which is based off of the 2 peaks. Because then you could definitely say, hey, I'm exiting out of the cup and handle and on to a new positive trend. So I've taken the opportunity to find some new stocks associated with that pattern. And let's take a look and analyze them. Some do exhibit the trend, others exhibit some of the problems that we've seen.